Ladies and gentlemen, welcome to Woodburn Accountants and Advisors China webinar series on what you need to know about accounting and tax in China. You've joined us for day 4, part 4 of this webinar series, where we'll be looking at designing profit repatriation strategies and the actual truth about outbound payment processes from China. If you didn't join us for the previous 3 sessions, on Monday, we looked at how you could create your China budget, and we also provided some tips and advice and guidelines on how to actually create that. On Tuesday, we looked at the ins and outs of corporate banking in China, and we also provided some tips and advice on the actual operations and back end of using a bank account in China from a corporate perspective. And then yesterday, we reflected on the Chinese tax system, how VAT system works, how FAPIAOs work, and what could lead to a tax audit, and things to think about in terms of fraud in relation to expenses that are being provided by employees. So today, we're going to put everything back together again, because one of the key concerns that people do have in China is, how can I get my money out? So I'm also very honored to have a guest speaker today, Howard Whiteson, who's a founder of Wealth Without Borders. Howard focuses a lot on empowering executives to create, transfer, and protect wealth internationally. And in today's session, he is going to look at a little-known way for individuals to repatriate renminbi internationally. And he's also going to touch on ways to usefully grow cash deposits outside of China. So let's get cracking and start today's presentation. So as you may all know, if you've joined my previous webinars, I really like to know who my audience is. So that involves you guys interacting with me just a little bit. I usually categorize people into 3 categories: the newbies, the startups, the experienced China hands. So in the chat section, please do let me know, are you a newbie? Which basically means, are you looking to go into China because you found an opportunity and you're evaluating the market and you want to understand how systems work, how you can protect yourself, and obviously you're in here today because you want to know whether you can get your money out. Then you got the startups in China. So those of you that may have already incorporated an entity in China, or you've actually transacted considerably with China for the last 1 to 3 years. And because you focus so much attention on your core business, it's now time to look at the administrative functions as well as the next steps. The experienced China hands are those of you or us that have been in China for 15, 20 odd years, and you're here to get new and fresh ideas on basically how you want to continue to grow and accelerate your business. For everyone's information, even though I've been in China for about 16, almost 17 years, I still educate myself. There's always things to learn about China, how to operate in China, how to live in China. And because there are so many regulations and legislations that frequently get updated or changed, it is a matter of absolute importance that everyone continues their education in China. So how does this webinar work? Well, Howard and I are here to basically teach and educate you. I only have one slide where I'm going to be selling you something. The whole purpose of this presentation today is really to give you information to know what you can do with your capital on the ground in China and what considerations you have to actually make. And for those of you that are expats on the ground, Howard's going to be touching on, what can you do with your funds, how to utilize them appropriately if China is not where you see yourself in the long term. So because this is going to be about 60, 70, yesterday's was about 80 minutes of your time spent, please use this opportunity to ask questions. You've got a question section in the control panel. Insert your questions in there at any point throughout the presentations today. We will have a Q&A at the end, and Howard and I will be going through all the questions that are listed. So do stay on the line. Please do use this, as your value spend. A minor disclaimer. Yesterday, I got kicked off of my internet for a very short period of time. So if you did join yesterday's session, there was a brief period of pause. because my connection went out, but I did come back. So if it happens again today, please don't leave or exit. I will be coming back on to finish the presentation. I have to come back on in any case to finish the recording. So please, if you have the time, do stay on. Again, I don't own GoToWebinar. It is just a platform that I have utilized and paid for. It can be very frustrating during these times when we're at home, we don't have the necessary bandwidth or the stability on the internet connection. As I am presenting, I cannot help you with the technical side of things, okay? So if you do get frustrated and you want to leave, just know you will get a link to this recording and you will also get a copy of the PowerPoint presentation, okay? Again, please, please, please do interact with Howard and I throughout today's presentation. So who am I? My name is Christina Kohler-Coluccia. I'm the head of business advisory at Woodburn Accountants and Advisors. I am not using the webcam, or Howard and I are not using the webcam today because we do know it affects some people's bandwidth and stability. So here is basically a picture so you know who's talking to you. I've been in the corporate services and compliance sector for the last 16 years, specifically in Shanghai, specifically in Shanghai where I'm based. I've helped over 500 international companies with their pre-investment advisory, their physical market entry, their actual implementation, and most importantly, their growth and acceleration in the Chinese market. And I'm a founder of the China Roadmap program, which is a program or a roadmap that I recommend all companies think about when going into the Chinese market. In addition to that, if you guys want something free of charge, I've written an ebook. I wrote this during COVID-19. I know that China has come out of COVID-19 slowly, and there are steps to things getting better. But for those of you that are in the UK, Australia, the US, Canada, wherever you might be, you may want to read up on the insights that I learned and that I found during COVID-19 and the opportunities that are now existing for companies, particularly in the digital sector, medical sector, pharmaceutical sector, etc. Feel free to email me, Christina@woodburnglobal.com. I do want to touch on the China Roadmap program and the China Roadmap itself, because every single presentation that I do is because of this roadmap. It is actually for everybody to gain superpower number one, which is education. You want to be educated when you go into the Chinese market. You want to know how to do business in China, how to transact with Chinese companies, how to set up your entity, maintain it, protect it, and create certain system processes. Today's presentation is going to be looking at a variety of these superpowers today. Everything from developing system processes about profit repatriation, so creating guidelines about how and why you're going to be repatriating funds. It's going to be talking about looking at the analytical side of things. Do you have funds available to repatriate, or do you need funds to continue your expansion in the Chinese market? All of these aspects are so critical when going into the Chinese market. You've got to evaluate your opportunity, you've got to implement correctly, and you've got to grow. One of the key aspects regarding the China Roadmap, which is also why I've got Howard here, is developing your ecosystem and your network so that you have people who can guide and help you with all of these aspects, okay? So Howard and I, we've known each other for a number of years. We met actually through the British Chamber of Commerce at an event I spoke at, and we've stayed in touch ever since. And he's been one of the partners that I refer individuals to, expat individuals who are looking to understand more about getting funds out. There's so many things you have to think of and that you've got to put on your checklist when developing a business or an operation in China. And it doesn't just mean setting up an entity. It can also mean just simply transacting in China. You've got to know all about the ins and outs and be prepared for it. So that's a bit about the China Roadmap. What are we covering today? A lot of things. We're going to be really reflecting a lot on profit repatriation. Why do people want to repatriate? And most specifically, how can you repatriate? And we're also going to be looking at signs of evasion by tax authorities and tips on how to get your strategy set up on time. And like I said, last but not least, Howard is going to be looking at expatriates, getting their funds out as well. So let's start off with a common concern. So these are usually questions I get in the pre-investment stage from what people have read on China, what people have heard through colleagues or friends in their network. So the most common question is, can I take my money out of China? There is always a sense of panic, fear, anxiety, worry that if they do well in China, the Chinese government will notice them and they won't be allowed to take dividends out, or they won't be able to repatriate funds out. Guys, if China did that, do you think all these multinationals would go in? Do you think that all of these SMEs would be setting up? No, they wouldn't, okay? People are going into China because it is an opportunity there for you to do business, to earn money, and naturally they will allow you to take your money out. Now, I say allow you because they do allow you, but it is an extremely bureaucratic procedure, which is why I've created this webinar today to explain it to you. So you've got to be prepared up front if you want to develop these types of strategies, okay? If you are a startup, or if you're already a China experienced hand and you haven't thought about repatriation strategies because you've always just thought about breaking even, or you're just simply not profitable yet, you can still initiate these strategies that I'm talking about today, okay? So what we're worried about in terms of profit repatriation or getting money out of China is the bureaucratic procedures, applications, approvals that have to occur, okay? So other questions that I get are, regulations change constantly. Will there be a point someday that the Chinese government will prevent me from taking my money out? I mean, if China did that, the publicity on China will not be so good, will it? And on a global scale, where most of the global operations have China in their supply chain, I simply cannot imagine that from happening. Looking at that the procedures are complex, they are. There's no going around that. I mean, let's face it, if you've been on my previous webinars, you will all know nothing is easy in China. You have to go through certain bureaucratic procedures that are very common in China, might be foreign to you because that's just simply not how it's done in your home jurisdiction. As soon as you learn how these procedures work, it becomes second nature. And I say that because I've been doing this for 16, 17 years, and for me, it has become second nature, all right? The next questions are, can I negotiate with the various offices like the Ministry of Commerce, Tax Bureau, State Administration of Foreign Exchange, bank, about the documentations that are needed and the tax rates that are applied? Of course you can, okay? Negotiation is a cultural aspect in China. You can always negotiate. However, you should know what war you can win. And what I mean by that is, if you start negotiating and you become very picky about every single thing that's getting denied to you, and you keep fighting every single thing, I mean, the tax bureau, your tax officer or your bank officer, they're just going to get annoyed with you. Who wouldn't? I mean, it's the same in the UK or the US. If you start complaining and negotiating about everything, there's never going to be a leeway, okay? So when you're negotiating, or when you want to negotiate with a certain bureau, think very carefully what you're negotiating for, okay? Choose your battle wisely. Don't fight for everything, okay? And don't forget that in most organizations, there are hierarchies. So if your tax officer says no, but this is really an issue you want to fight on, you go to his boss. You go to his boss's boss, okay? You go up the ladder. Just be prepared that that means your tax officer is going to lose face because you're going one step up, right? The ladder of hierarchy. So there is a cultural issue with that you have to be aware of in the forefront. But if the issue is vital for you and your business, fight it and move up the ladder, all right? What happens if the company cannot provide the documentation that is needed? Quite frankly, if you're trying to create a repatriation strategy and you don't have the additional documentation to prove why you want to take that money out, then you're doing tax evasion. Pure and simple. Okay, we want to get away from tax evasion and look at tax optimization. Everything that we are going to be talking about today in terms of strategies and what you're creating has to be true and valid. Because if you cannot provide the supporting documentation to the bank, to the tax bureau, it probably means that that transfer is not real. It's not authentic. Okay, and it will get denied. And trust me, if you try to play that game with the tax bureau, you know, there you're actually losing credibility. So be aware of what you're trying to create in terms of designing your profit repatriation strategies. Each government office requires to show different documentation. This is stressing me out. Do I give up? No, don't give up. Honestly, it becomes second nature, okay? Usually what you need to do is just be prepared and organized in advance. And that's something I'm gonna highlight in today's presentation. The last point is, you've got to follow the steps, you've got to follow the guidelines, and ultimately don't fake it. So why do I say don't fake it? I say it because in the past you could very simply fake it. Probably about, I would say 5-6 years ago, you could create fake repatriation strategies. Which meant that you were creating kind of fake documentation and contracts in order to get money out, because nobody from the tax bureaus or banks were asking for any form of supporting documentation. Because of OECD regulations, because of BEPS, the whole world has become much more transparent. Every bank has to do a KYC process and know your client process. They have compliance procedures that they do now have to follow. Tax bureaus want to earn tax revenue, so they're going to make sure that if you're taking money out of China, it is for a valid reason. They want the money to actually stay here, okay? This is not just happening in China. This is happening in every jurisdiction around the world, okay? So it's nothing new in the latest periods of time. So ultimately, just don't fake it. Now, for me, why is it important for developing profit repatriation strategies as soon as possible? Well, quite frankly, it's because of situations that we're in right now in terms of COVID-19, okay? If you've got a subsidiary in China that's doing extremely well and that is cash rich, well, you know, your home jurisdiction might need some of that cash to help it sustain itself. This happened also during the 2008-2009 financial crisis. So you want to repatriate funds in order to be able to free up some cash for other forms of investment or in crises like we're in today. For me, the next point of developing strategies timely means that you are also creating a tax optimized structure from the beginning, okay? You don't want to be in a startup phase. You've been operating for 1 to 3 years, 1 to 5 years, and you've never thought about optimizing your structure. Changing that structure to then make it optimized is something that is very easy for any government office to understand, okay? And they might perceive it as evasion versus optimization. So doing it right from the beginning is something that really you want to develop so that you're also fully aware of what you can do and how you should operate. Lastly, developing strategies from the beginning, it gives you a choice. And this is what people, when they're in their pre-investment stage, I really try to drill into them, okay? Your biggest fear is getting your money out of China. Nobody is forcing you to take your money out of China. It is your sole decision, okay, as a business owner, as an entrepreneur, as a managing director, okay? Nobody's forcing you to do it. It's bureaucratic to get it out, but nobody's telling you you have to take it out. So one thing I want you to keep in mind is that when you're creating your long-term business plan, do you need to keep funds on the ground to help you with further investments? Or are you really so fixated on taking money out because you're worried that someone's going to take it? Okay, that's not how you should be operating your business. And if you have that fear, then maybe China's not the right market for you to go into right now. Okay, you've got to think of it from a business and professional perspective. You know, you've got to look at cash flow. You've got to make certain analyses about your business in the long term and whether money needs to stay in China or whether it doesn't. Okay, and obviously, what plays a huge role is also, you know, what do your investors want, right? What do the board of directors say? So that has to be all taken into consideration. But nobody is forcing you to take your money out. Now, for those of you that are on this presentation because you're simply transacting with China and you are working with Chinese companies and you're invoicing Chinese companies, I am hoping that the procedures that are explained today will help you understand the processes, okay? Everything is possible, but nothing is easy. I'm hoping that it'll also help you to communicate better with your Chinese counterparts. So I do know, I recognize a couple of faces on here today. I do know that some of you are finance managers in the headquarters. I'm hoping today it will give you a certain level of understanding on how to communicate with your accountant locally, your outsourced provider locally, and not to get frustrated with them because of all the bureaucratic procedures. All I want to develop is open communication, and that comes from knowledge, okay? And lastly, I'm hoping that it will prevent you from being cheated by certain Chinese counterparts, especially when you're looking at the tax components. So if you're simply transacting between, let's say, the UK and China, and you're invoicing a Chinese party and they say, okay, well, from this service fee, we've got to deduct 25% tax. And you're sort of like, whoa, where did 25% come? It didn't come from anywhere. That came from the top of their head, okay? They're trying to potentially keep funds from you. So today we're going to be looking at the tax components as well and how to calculate that so you don't get cheated. So I want to do a little bit of a poll. So I want to ask people in the audience, do you think the authorities in China are familiar with tax optimized structures? Or do you think they're not educated on it? In the chat section, type in educated, not educated. Very simple. Love to hear your feedback on what you actually think. Please do type it in. I'm going to give you about 20 seconds. More to see. Jeffrey says educated. Leon says educated. Lee says educated. Magdalena says educated. Maybe I was leading you guys on. You are absolutely correct. They are educated. Okay, they know exactly about tax havens, tax evasion, and tax optimized structures, which is simply saying that, first of all, you've got to create true, authentic agreements and contracts. By the way, in this presentation, I've used UK as an example because a lot of the people that are on and registered are from the UK. So I've used that as an example. You got to be smart. You can't fool the tax authorities. Don't mess with them. Okay, don't try to think that you can beat them. These aren't the days to do that. Make sure that your overseas company, i.e. the shareholding company of your China entity, has economic and commercial substance, meaning that it's not simply a holding entity. Otherwise, you won't benefit from the double taxation agreements. And simply understand that there are Forex issues in China. Okay, it is not easy to make conversions. So one of the things that I'm going to recommend to anybody that is transacting in China, even if you have an entity in China, is that you should think about opening up a renminbi account in your corporate head office. If you're based in the UK, you've got Bank of China, you've got ICBC, you've got HSBC that also opens up renminbi accounts. You've got a lot of options. Think about opening up a renminbi account in your head office to help and facilitate the speed of transactions. Okay. Now I'm going to go to the basics because without going to the basics, I can't explain how to design your profit repatriation strategy. All right. So the basics are the following. One, enterprise income tax, otherwise known as profits tax everywhere else in the world, is set at 25%. Yesterday, I highlighted a special policy for small, medium-sized companies going on from Jan 1, 2019 to December 31, 2021, where depending on your taxable income, it's either at 5% or 10%. Okay. Next, before distributing after-tax profits, the companies in China are required to make up any losses carried forward from previous years. If you're not aware of this, during COVID-19, the losses that are made in 2020 for certain industries will be carried on for 8 years. Otherwise, it's 5 years. All right. In addition to that, you have to allocate certain funds you have to allocate certain after-tax profits into certain funds that are used as emergency funds. So you have reserve funds, which are used to cover any losses suffered by the company. You've got enterprise development funds, which are used to expand the operation and increase investment with approvals that are required from the local governments. And then you've got staff incentive and welfare funds, which are irregular rewards to employees and other collective staff welfares. Okay, it's also a fund that is utilized if you do go bankrupt to pay out employees if applicable. Okay. So in terms of these funds, these reserve, enterprise development funds, staff incentive and welfare funds, there's a cap to each fund. Okay, so generally speaking, the foreign investors are required to allocate 10% of their after-tax profit to the reserve fund. They cannot reduce this rate, and basically the fund has to reach an equivalent amount of 50% of the registered capital that has been announced or provided for the entity. Okay. For joint ventures, it is slightly different in terms of how the fund system works. So now we've looked at profits tax rates, we've looked at after profits tax funds, losses being carried forward, we've looked at these 3 special funds that are being created, and then you've got to think about transfer pricing. So when you're developing your profit repatriation strategies, you've got to make transfer pricing as part of your checklist, okay? And you've got to know anything and everything about transfer pricing regulations. Now, I've only put one slide here because transfer pricing only comes into fruition with the tax bureau if you have achieved any one of these 4 items that I've listed here. And as you can see, for point 4, I've highlighted that in red because that's generally the most common trigger for creating your local file for transfer pricing. Okay, where you're having sister party transactions or related party transactions that exceed 40 million RMB. Now, if you're a small, medium-sized company, 40 million RMB actually, quite frankly, it sounds like quite a lot of money. Okay, so that actually means that transfer pricing might not ever be applicable to you. And then you might have a little bit of leeway in terms of how you develop your transfer pricing guidelines. Okay. But it is something you have to think about as you're developing your profit repatriation strategies. Then you've got to think about, again, another basic requirement, you've got to think about the double taxation agreements. So here, as an example, I put the one between the UK and China. Okay, you've got to basically look at the last column on the right, which is the new DTA rates. They're not so new anymore, but that's how I've created this table, where there's a dividends tax rate of 5%, interest is at 10, royalties at 6, capital gains at 10. Okay. Now, why does this play an important role? Because when you are repatriating funds, there will be tax implications. And depending on where you are sending those funds to, you've got to look at that jurisdiction's DTA with China to know what taxes will be applicable. And when you are registering your profit repatriation strategy with the tax office, you've got to, at the same time, apply for these tax rates, which means the tax officer might come back to you and say, well, have you fulfilled these criteria? Does your company abroad fulfill these certain criteria? Okay, and if it doesn't, then you still have time to make sure that that company does fulfill those criteria. Again, all of this will make a little bit more sense as I explain the actual strategies. So let's start explaining those. The first one is dividend repatriation. Simplest form of repatriation, quite frankly. Only disadvantage is you're paying the taxes full up, right? What you need to think about is that for the after-tax profit, the registered capital has to have been injected in total. Prior year losses have to have been made up, and you have to have put the funds in the statutory reserve funds before you can even think about doing a dividend application. So that could potentially be years down the line before you can repatriate funds. Some of the tax considerations when thinking about dividend repatriation, well, first of all, you're paying the profits tax. So let's talk about the general rate. The general rate is 25%. You pay the 25% profits tax rate. You have paid in all the registered capital. You've cleared up all the year's losses, and you've placed the funds into the statutory reserve funds. Okay. Then you want to repatriate the dividends. There's an additional 5% withholding tax, which, like you can see from the table, the last column on the right, dividends 5%. So that's going to be applicable at that point. However, you've got to also show to the tax bureau that the UK company has economic and commercial substance, that it is not purely a holding company. They will want to see that it is operational in some shape or form. Now, some tax officers, if the amount is really little that you're repatriating, they might not ask for additional proof. If the amount is large, they will ask. They may ask to see the balance sheets. They may ask to see the P&Ls. They may ask to see if there's a rental agreement. They may ask to see what's the head count and then show payroll proof, etc., just to see that there is economic and commercial substance. Now, something I wanted to highlight, because if there are some China experience hands on here, then maybe your holding company is in Hong Kong and it really is a holding company. Well, the withholding tax rate is still 5%, but because Hong Kong is known as having been a tax haven, you have to really show economic and commercial substance from that entity. And that's where I have actually seen companies suffer because they haven't been able to show this substantial proof. Now, if you cannot provide the proof, then obviously this withholding tax rate will not be applicable. And the normal tax rate in the UK, it would be 10%, I believe, and in Hong Kong also 10% will be applicable. Okay. Now, again, we want to optimize, right? We want to optimize our structures. And there are little things that you can tweak in your home office jurisdictions, if there are holding companies, to make them look like they're economic and commercial. But it's all about planning and being prepared for it. So now let's talk about the outbound payment process, right? The bureaucratic steps, which is the first one, looking at the approval from the tax bureau. So when you're repatriating dividends, you've got to show all of these things. You've got to show the annual audit and the tax compliance, the annual profits tax compliance. You have to have a signed resolution by the board of directors or the executive director saying that you're going to distribute profits as dividends. You've got to apply for the DTA benefits, right? To make sure that you're optimizing this transfer in terms of tax. You have to show the record filing of the profits tax return. If the amount is over 50,000 USD, you've got to do a record filing with the tax bureau as well, which is a separate application. And then you have to show the banking documents filled in that you're going to make the payment. Okay, and this all has to be provided to the tax bureau. Now, this is the general list. There may be additional items that have to be added in, which is why, again, open communication with your tax officer 1 month or 6 weeks prior to actually wanting to do the dividend repatriation. Have a consultation with your tax officer to know what documents are needed and what's the timeline for approvals. All right, then you've got to go to the bank and physically make the payment. Okay, and the documentation list, again, it really depends on the bank. Here again is a generalized list. You're going to have an application form, which is what you have to show to the tax bureau. You've got the signed resolution, can be the same one as for the tax bureau. You've got the audit reports, you've got the tax record filing form, and you've got to also show proof that the registered capital has all been paid and that the reserve funds have been allocated. Otherwise, they won't repatriate. Okay, so nobody is saying you can't do it. It's just you have to go through these bureaucratic steps. And like I said, it does eventually become second nature, because as soon as you've got an open dialogue and communication with your tax officer, you'll get this information quite quickly so that you can prepare all the documents. Okay. Now let's look at other repatriating methods, which will be more strategic for your organization, where you can create these agreements before even declaring profits tax, right? Now, I just want to have a disclaimer here. At some point, you do have to make some form of profit in China. Otherwise, it is a red flag to the tax bureau, okay? But it does not mean that you cannot be strategic ahead of time. The issue is that you have to make sure that these agreements are all true and valid, and that if any supporting documentation is required by the tax bureau or the bank, you can provide them, okay? So when you're looking at service fees, I'm going to give you, I can't go through all of these examples, but I'll give you the main one, which is management service agreements. So for example, and this happens to almost every single one of my clients, you will have managers from overseas who travel to China to supervise the operation or go for business meetings or follow-ups or a whole variety of things that these managers will be doing from a variety of different divisions. Creating these management service agreements means that basically the head office is going to issue an invoice to China for the time spent and the expenses incurred by these managers, and it has to be paid back to the head office, okay? Now, one of the proofs that the tax bureau will ask for when there is an agreement in place and an invoice that is issued is that they want to see the passport copy of the manager that has traveled to China, to see the actual entry and exit dates so that they can verify whether it corresponds to the invoice and to the service agreement outline, which means that all three things need to match, which means the management service agreement should be either on a, the fee for the manager should be maybe a daily fee or a weekly fee so that it corresponds to the entry and exit dates. Make it as simple as possible from an operational perspective, okay? And then the expenses, well, I mean, if it's very high, they will probably want to see proof of the fapiaos associated with those expenses. I mean, flight ticket won't have a fapiao because I assume it'd be purchased from abroad, but hotels, transportation, meals. So the managers do have to keep these things on hand so that they can use it as evidentiary proof when trying to repatriate. Now, when you're thinking about all of these things, you've also got to think about transfer pricing model. Are you going to have a markup or not? In your industry and sector, what are the general trends for markups? These are certain things that the tax bureaus will ask, okay? If you keep sister-related transactions under 40 million renminbi, you might have a little bit more leeway there to play around with markup, all right? The contracts that you develop should be in Chinese language because the tax bureaus and the banks will only want to see the Chinese language. My suggestion is that it's bilingual so that everybody could read it and make it bilingual. Now, you've got to be aware of permanent establishment guidelines, which every double taxation agreement has different guidelines, okay? Because then additional taxes and scenarios might pop up. So for example, if you've got a management service agreement, but your manager is actually staying in China from the UK over 183 days, he's going to have individual income tax implications on him. But in addition to that, there will be profits tax implications on that invoice as well because he went over the permanent establishment guideline timeframe, right? Like I say, a lot of things that you got to think about, all right? The tax considerations around these service fees, well, obviously, you got to think about where the service is actually occurring. Now, generally speaking, the physical service of management fees will occur in the Chinese territory, in mainland China, which means that there will be tax implications. So on these types of invoices, there will be a 6.8% VAT and surtax if you're a general VAT taxpayer, or 3.5% VAT and surtax if you're a small scale taxpayer. Currently, under COVID-19, that 3.5 would be about 1.5 now, okay? And then you will have a tax rate, which will be according to the double taxation agreement. In this case, you've got to go back to the table. Let me just go back there. And you are looking at the interest rates of 10% that are going to be applicable. Okay, so a lot of things you got to think about. Now, what's the actual process physically? First, going to look at the process at the tax bureau. Okay, so your Chinese company has to go with the contract and register it with the tax bureau. I'm going to be on another slide. I'll be talking about what that actual contract registration entails. Okay, so that's a whole nother list. But you're going to have to register the contract with the tax bureau, which is why I say, please do these things ahead of time, because there is a certain period that's applicable. You've also got to apply for the DTA benefits. You've got to do the filing of the profits tax. So for example, in this case, it's not the annual profits tax return. In this case, it's the quarterly profits tax, okay, that it has been filed. If the amount is over 50,000 USD, you've got to do a record filing with the tax bureau, and then you've got to show the bank application form as well. So at the bank, you're going to have an application form. Sorry, apologies, I didn't add that in here. There's an application form. There's a service contract. The actual contract that's been approved by the tax bureau has to be provided to the bank. You've got the payment notice or invoice, and then they may ask for additional documents of authenticity as well. Okay. The third method is looking at royalty fees. Okay, and I'm going to focus here on trademark licensing agreements, because quite frankly, every single company that is doing business in China, regardless of sector and industry, regardless of what you're physically doing on the ground in China, you should be registering your trademark. And it is the simplest form of profit repatriation that you can create. Okay, because the only document you have to show as proof is the trademark certificate that has been published by the CTMO to show who owns the trademark, to authenticate the transfer. All right. What you do have to take in mind is the transfer pricing model, because here, based on your sector and industry, they may take a look at what percentage you're trying to place as a form of repatriation. So for example, with a trademark licensing agreement, you can say, all right, the UK company owns the trademark XYZ, the China entity is utilizing that trademark for marketing purposes, et cetera, et cetera, et cetera. And the UK wants to earn, I don't know, a 5%, 7% on the revenue. Okay, it can also be on the net profit. It depends on how you want to make that calculation. But the tax bureau will look at the percentage, evaluate it based on your sector and industry. What are the trends, and what are other companies doing? Contracts should also be bilingual, Chinese, English. And then you've got the tax considerations. So you've got, like I said, the withholding tax rate, which is going to be at 6% if you're with the UK. You're also going to have the VAT and surtax. That will also be applicable. And then VAT can be refunded or exempted depending on where the service is physically taking place. Okay. So for example, if the UK is providing a technical service to China, but actually nobody is traveling to China to deliver that service, it can all be done from the UK. Potentially that VAT can be refunded or exempted. Okay, and that's looking at a technology transfer or a type of technical agreement. Okay, then we're looking at the actual approval process. So again, it's very similar to the licensing fees. It's like contract registration, DTA application, filing of the previous quarter period profits tax, record filing with the tax bureau, bank payment. Now let's look at actually what it means to do a contract registration. And I'm going to use the example here of the trademark license. So the tax bureau has an application form that you have to complete. You have to show the contract, which has to be at a minimum bilingual. You have to show the Chinese company's business license. You have to show the business license or registration certificate of the UK company. You've got to show documents that highlight how the calculation has been created. In addition, you have to potentially show an audit report or financial statements of previous months. The Chinese company will have to also provide the latest audit report and then the certificate of registration. Okay, but there's no other additional documentation to be provided. All right, so that's actually how you register the contract with the tax bureau. And this is why I say these things have to happen ahead of time. Now, there are other methods of repatriating funds where you're not actually specifically repatriating. So one is capital reduction. You all know that you have to specify a registered capital amount to register an entity in China. In your articles of association, there is now a clause where you can apply for a reduction, but it clearly states always that it is an approval process with the Ministry of Commerce. That is, I have never done such an application, but I have heard horror stories that about 90% of the cases are always are rejected, which is why you should really calculate your registered capital accordingly. During the financial crisis of 08-09, there were a lot of Chinese companies that were acquiring assets overseas or providing loans to the overseas shareholders. You can also have other methods where you're adjusting transfer pricing models. So you're sending more capital abroad through those transfer pricing models. Again, be careful of that. It is a point that is investigated by the Bureau. And then you can also obviously do more offshore investments. Now, this all happened in 08-09, which is why I list it here. I will not necessarily recommend a client to utilize their Chinese company to buy assets or provide loans overseas. There are other methods of doing that scenario. So, do talk to people when you're trying to think about repatriating funds and what would actually be applicable to you. So now let's look at what are some of the suspicious signs for evasion by the tax authorities. So the first one is significant amounts or numerous types of related party transactions, okay? Where it blatantly shows that over a certain period of time, meaning a number of years, that you are sending funds over before declaring profits tax to your shareholding company or other sister related organizations. Red flag, okay? You gotta be very careful on how you're doing that and make sure it's not too obvious that you're repatriating everything. Like I said, at some point, you do need to make some form of profit in China. If you've got, and that leads me to the next point, if you've got long-term losses of low profitability or fluctuating patterns of your P&L, then again, red sign. Okay, it's sort of interrelated with each other. The tax bureaus are quite knowledgeable on what are industry standards, sector standards. So if you're below average in terms of profitability for these types of sectors or industries, then that can also lead to a form of a audit by the tax authorities to see what you're doing. Because if it relates again to doing outbound transfers, makes it a bit obvious. Again, if you've got numerous business dealings with companies established in tax havens, by tax havens, I'm talking about Guernsey, Mauritius, Seychelles, BVI, some cases even Hong Kong, then in those situations, again, they might come and do a bit of an audit on you to see what you're actually doing and who owns those entities in those jurisdictions. If you have reached any of those triggers regarding to transfer pricing and you do not provide the complete documentation associated with that, then again, that's a red flag. And if there are obvious violations of arm's length principle as well, which is related to obviously the transfer pricing, then again, you can get in trouble. So it is a bit, you've got to be aware of these suspicions and make sure you don't fall under any of these categories. So the last couple of slides are just looking at the tips to get your strategy set up on time, and then I'm going to let Howard talk. But in conclusion, what do you need to think about? The first is you've got to think about creating true, authentic agreements and contracts. Really, honestly, the easiest one is the trademark registration. If you haven't registered your trademark in China, get that done as soon as possible. The second level I would look at is management service agreements, because you're always going to have managers flying over. And obviously, if there are technical things that you want to add inside, you can do all of that. Be smart and choose your battles. Know what you want to fight with the tax bureaus and the various governments, okay? Conduct the contract registration as soon as possible. It is for sure a period that is longer than 6 weeks. So you want to make sure that you have registered your contract at the appropriate time where you're not in a rush to then issue an invoice for profit repatriation, okay? Because that's too obvious, all right? You want these contracts to be registered so that at any point that you want to invoice for a repatriation, contract's done. Tax officer can't say anything, okay? And your contracts will have a contract registration number that is associated with them. Now, the only downside to doing this early is obviously if there are amendments to these agreements, because things can happen, changes can happen, etc. And you may want to amend certain things, at which point the amendments have to also be registered. That usually should be, depending on what you're amending, should actually be relatively quick because the main contract has already been registered. Then you've got to apply to the tax authorities for the tax assessments, right, during the contract registration. And that leads to the next point, which is also registering then the treaty benefits and understanding, you know, how to make sure that that entity abroad has commercial and economic substance. And last but not least, again, open dialogue with your tax officer and your bank. Know what documents are required ahead of time. Most of the time, you will find that for every transaction physically occurring, it will be a different document list. That's just the bureaucracy of it all. But again, you know, you can plan these things ahead of time before it actually happens, so that if the document list is different, you can just prepare to get that document list ready. All right. You can't do that if you don't have an open dialogue with your tax officer. So I'm going to stop talking and I'm going to let Howard go on. Howard, I'm going to unmute you now, and Howard can go ahead and begin his presentation. Howard?
Thank you so much, Christina, and welcome everybody. I'm particularly pleased as a British person in China to hear that you've got some Brits on, and I just want to say Christina is my go-to person when it comes to helping out people who get into difficulties in China. And one of the things I would say that I've found very valuable listening in is be prepared and prepare as much as you can ahead of time. Unfortunately, human nature being what it is, I will often refer people to Christina who haven't been prepared, and then it's obviously much more difficult for her to do her job and help them out. She is expert at doing that. I don't know anyone with her breadth of knowledge, but still, if you're prepared, I think many of the problems people face can be avoided or mitigated. So Wealth Without Borders, I'm Howard Whiteson, and I've lived in China now for 6 years. I've been an expatriate for about 16 in America, in Spain, and here in China. And I come from a position of financial chaos. So I was one of the people who would have ignored somebody like Christina and thought, to hell with it, life is short, let's go for it. And so my father was an economist and brought me up with a great deal of knowledge of the financial world, but I rejected all that in a typical teenage rebellion. I became an actor, I had a fantastic life, but I got myself into extremely difficult waters with money. I had a lot of debt, I was very chaotic, and I turned everything around and am now, you'll be pleased to hear, very much sorted out financially, much more aware. And I realized that my journey could be put into a process. So I've put my journey, if you like, into a 5-step proven process. And that process is something that I go through with my clients. And it's also something that I share with people who are interested, because for me, it's one thing to have a business and it's another thing to be personally organized financially. And it may shock you to learn that I deal with CFOs at major multinationals who are very aware of the profit and loss in their companies, but their own finances are very chaotic. So just a little bit about my authority to speak in this way. So I'm with the Chartered Institute of Securities and Investments in London. I am occasionally very privileged to be a guest lecturer in behavioral finance at New York University in Shanghai. And then I'm a senior wealth manager with the Dividend group. So we're a global group. And I help people primarily in East Asia, but also in many parts of the world who are expats. And then I've gone from that position of chaos to now giving advice to senior executives at a number of multinational companies. I won't mention them all. They include one you may recognize there, another one you might recognize, and Gucci. And I'm very privileged really to have that relationship with individuals. And one of the questions many individuals ask me is, Howard, I've built up a lot of renminbi while I've been in China. How do I get it out of the country and back into, using the UK example, Great British Sterling? I'm not sure why you'd want to at the moment. Well, we need that money back home. So there are essentially two ways. There's, if you like, the painful way, which it does involve, as Christina said, from a company point of view, and also an individual point of view, going into a bank, I recommend, with an extremely good native Chinese speaker who is able to fight your corner. And basically, China's view, rightly, is that as long as you've paid tax on the money, you can then take it out of the country. However, my experience has been that different banks operate in different ways, and it is possible to hit roadblocks, which can include the plea that the bank doesn't actually have that currency, that there's some type of paperwork missing and one has to go back and start the entire process again. And it is, quite frankly, painful. And I would guesstimate it could be up to 3 hours in the bank, but money can be converted and sent out of the country. And all the way through to significant sums of money can be converted and sent out. One of my clients did very well by buying a property in Shanghai 12 years ago, converted that into euros, and that is a 7-figure sum that is now his retirement fund held in Europe effectively. So it can be done. It's just that the paperwork has to be right. And then there is a little known or less known method which doesn't transfer masses of money, but over time, if you're resident in China over a number of years, I suggest you set up something like this. It's very difficult to get a credit card in China. And this card says Visa. By the way, this is my card, so please don't spend all my money. I will explain that you can't really spend much of my money. So although it has a Visa logo on it, it's actually a charge card. And as you can see in the top, in the middle, it's from China Construction Bank. I live in Shanghai, and there's only one branch you can get this card, which is close to my office in the center of town near a place called Xintiandi. And you go in there with actually very little paperwork. I'll talk about that in a minute. And in less than an hour, you can have this card approved, and it will be sent to you. At the moment, actually, COVID, even including COVID, you're talking about probably 10 days to 2 weeks, you'll have that card in your possession. And then what that card allows you to do is go from renminbi into another currency. And there's several currencies that you can choose. Obviously, if you're British, it wants to be USD, but you'll need some paperwork first. And I'll just explain what paperwork you need. So you'll need your passport, and you'll need, as well as that, proof of address, which is common in China. You'll need your tax ID number, which is often your passport, or if you're British, obviously your national insurance number might do, or indeed a tax number if you're self-employed in your home country. And you'll need a minimum of 5,000 renminbi in cash, or you can, if you've got a China Construction Bank debit card, you can make a transfer directly that way. And then just a couple of other things. You'll need a Chinese person as an emergency contact. And I recommend you take a Chinese person with you, although when I did mine, I actually did it on my own, and I can't write in Chinese, but I simply copied a phrase in Mandarin. God knows what I agreed to. I've probably signed my life away. But it's very straightforward, in fact, and the people in the bank are very helpful, speak pretty good English. And then what that allows you to do, let's use the USD as an example. So Chinese banks are notoriously difficult in many ways, but one area they're fantastic in is converting currency. And China Construction Bank converts renminbi into USD, and they only charge something like 0.01% for doing it. So that's a great conversion rate. Then you've got in your possession a card you can take back to Britain or back to America or back to Europe, and you can buy stuff. You can use it online. One of the reasons it's so advantageous and so easy to set up is, in fact, it's not a credit card. So I'm not too worried about you spending all my money. So it's actually a charge card. And that, let's say you took in 5,000 in cash, at any one point during the course of a month, if I put 5,000 on the card, I can spend up to 80% of that renminbi, in this case, 4,000 renminbi a month. And that's why it's very easy to set up, because you're never going into debt with that card. And therefore China and China Construction Bank is taking no risk. And then when you finally leave China, you can close the card and take the remaining 20% at that point with you. I recommend that rather than just spending your money, you look at setting up some kind of international pension or international savings plan with that money. Because again, one of the common things I see, and this can be amongst very senior executives, CFOs, is they will build up cash back in the UK. So they may convert renminbi into GBP by one means or another, and they don't really have time to focus on investing. As a UK expat, you can no longer buy what are called ISAs. For those of you who aren't familiar, those are somewhat tax efficient, but very poor growth, but at least they're tax efficient. You can't do that. It can be difficult to buy property as an expat back in the UK, although it can be done. So generally, cash can build up, and it can build up for many years. If you put it into something that grows in a tax efficient manner, and you are subject to the currently 6-year expat rule in China, which means that provided you obey certain conditions, you're not going to be paying any tax to China on your overseas growth, or your income rather, and you're not paying any tax back to the UK. It's all perfectly legal and above board. You can grow that money and you can defer the tax, and that is very advantageous. I don't have time to go into that now because obviously we've had a long session, but if you want to talk to me about specific plans that are made for expats, I'd be very happy to talk to you about those. But certainly some form of growth. It could simply be a platform. The only downside of many platforms out there is that they will charge often for credit or charge cards, whereas many international pensions effectively absorb that charge, and so you don't pay any charge for transferring the money. And then once it's set up, it's all automated, it flows through in that way, and you can get on with building your empire in China. So that's it. One well-known method, go in the bank and suffer 3 hours of pain. Another method, suffer 1 hour and then set it up and it's automated. I know which one I prefer, but obviously you must decide how you want to do that. But what I would caution against, unless, as Christina said, you are looking to make investments in China, and there are some fantastic investments to be made, I would look slowly over the years to chip away, send a small amount back each month, each few months, once a year, and grow that money strategically and safely. That's it. Thank you so much for listening. I will put my contact details into the questions and answer session, the chat box rather, so you can reach me on WeChat or through my website. And I'd love to thank Christina for this wonderful opportunity to speak to all of you. And I hope you all have successful businesses here in China as a result.
Thank you, Howard. It is actually now time for the Q&A session. So we've got a couple of questions that have already come in. So I'm going to start off from the top down. So Anna wrote a question about where could I find more information about the reserve fund requirements for joint ventures. Anna, if it depends on whether you are planning on setting up a new entity or whether you're planning or you already have an existing entity, because under the new foreign investment law, there are changes with the reserve fund requirements. So it does depend on at what point you're planning on establishing. If you want more information, you can feel free to reach out to me and I can update you on that. From Johan, there is a question for Howard. Howard, thanks for the tip on recurring amounts. However, how does the limit of the 50,000 USD work for private overseas transactions?
So yes, there is a limit of 50,000 USD that you can take out as a Chinese national. You can go over that limit, providing you can show you've paid tax on the amount. And then there's also a limit on the monthly amount that you can take out on the card. And that varies over time. There have been a number of scandals, mostly with very high net worth Chinese, who have used insurance vehicles as a method to money launder. And so as an expat, we get caught up in that restriction, but it can still be a healthy sum. You can send several £1,000s, so several tens of thousands of renminbi out into another currency each month. And I just think it may not solve all of your problem, but anything that you can do to get money into your home currency or another currency, if that's appropriate for you, is going to be valuable and valid.
Johan, Anna, I hope that we were able to answer your questions. So far, that's all that's popped in. I'm going to give you guys another 30 seconds or so if you want to add on to that, or somebody else would have a follow-up question from that. We'll still be around. Looks like there's not, but again, I did promise I would give a selling page at the end. So in terms of how Woodburn and Accountants and Advisors can help you, we offer a variety of services in relation to accounting and tax issues, all the way stemming from incorporation, business plan and budget validation, to designing these types of profit repatriation strategies, doing health checks, internal audits, and due diligences. So if you would like to learn more about these services, don't hesitate to reach out. Also, we offer a strategy session. Again, as I've mentioned on the previous webinars this week, people seem to be a bit nervous about doing this. There's absolutely no strings attached to these meetings. It's a way for you to be able to extend your network, get to know me to get to know you. It's a way of just brainstorming some ideas you might have about going into China. So if you want to set up a meeting, I'm going to put the link. It goes directly into my diary, and I'm going to put it now into the chat box, if I can spell it correctly. Hold on. There we go. By the way, if there are more questions coming in, you still have time to type. I'm going to give you my WeChat ID as well. Don't feel shy. You can just add me. And then my email is also Christina@woodburnglobal.com. All right. Well, that's the end of today's presentation. It's the end of this week's webinar series. I would like to thank those of you that have been joining in for the whole week. It's been a pleasure having you. Do remember that there is going to be a webinar series in June, which is all about tapping into China's trade opportunity through traditional as well as e-trade. So if you want to sign up for that, we've got also a guest speaker going to be coming in talking about customs issues, warehousing issues, and we'll be looking at distribution models and things like that that can be set up. Howard, thank you very much for joining me today. And And again, I hope to see everybody very soon. Thank you and goodbye.
Thank you, Christina, and thank you, everybody. Goodbye.